Okay. Welcome. Thanks for coming. Appreciate you guys sticking around late in the day on the continent to stay with us. And I appreciate you guys in the States coming in on your lunch hour. Today's subject, identifying current pattern and indirection in today's markets with myself. It's such an important topic, and I'm going to show you also that once you understand, once you look at price pattern first, all the news, everything else starts to make more sense to you. You have to gauge the effect of the news in the context of the pattern with the understanding that the pattern is absolutely an overall reflection of the business cycle. And essentially your primary pattern pretty much that's the visual of the business cycle. Your lower down day-to-day time frame is absolutely going to be a reflection of the day-to-day news flow in the market. Before we get rolling, as always, I need to point out that trading futures and forex is a risky endeavor and not suitable for all investors. The emotions brought on by trading, really brought on by the possibility of acquiring quick money, it has a powerful effect on people, and it'll make you loopy. Can't think of a better term for that. So you have to be aware of that. It's not for everybody. It's a mesmerizing business. People with addictive personalities can have a problem with that. Enough said, right? The techniques demonstrated here, that is, as far as measuring the patterns the way we do in the directions, the way we do our proprietary, and should not be retaught or retransmitted in any way. That doesn't mean I don't want to help you guys. That doesn't mean you can't help your close friends, your trading buddies. By all means, invite them in. But these are proprietary techniques, and we ask that you respect that. Hi, Boyke. Good to see you, sir. My name is Jay Norris. I'm a 20-year trading floor veteran of the Chicago Board of Trade. I also studied extensively under Dr. Bill Williams, who's author of Trading Chaos. Happy birthday, Bill. Just turned 81 over the weekend. Well, I can't say enough about the man. Just a fantastic trader, fantastic investor. I mean, just his worldview is really something else. And it all stems from price pattern, too. Bill was actually an Elliott Wave guy. That was kind of his philosophy. And I'm not exactly an Elliott Wave guy, but I definitely understand the importance of price pattern. Price pattern's everything. Literally, when you see price, but once you grasp that concept that the pattern, the overall pattern on the chart is absolutely a reflection of the business cycle, and that day-to-day pattern on the chart, anywhere from a couple of weeks to a couple of months, that all-important day-to-day pattern is absolutely a reflection of day-to-day news. So I absolutely learned that from Bill, is to see the world, see the markets from the context of the pattern that the world itself is producing for us. Great book, Trading Chaos. And I'm also the founder of Trading University here in Chicago. We've been teaching our clients for going on 3 or 4 years. I think we've really jumped above, I think we really jumped above everyone else this past year or two as far as teaching in live markets. And that's really that's how you're going to stay on top of these things, to be in live markets all the time and observe the changes. I've written a couple of books on trading, which were published by McGraw-Hill and serve as the textbook for our courses. What makes these books unique is that they both include trading plans, which allow you to backtest the information provided. It's there's the other one. It's extremely important that I'm transparent and that you guys learn to be transparent with yourself too, as far as looking at your, gauging your trading plans honestly, gauging your odds essentially of success. You need to understand, you have to be intimate and understanding of your winning percentage, your win-loss ratio, all that stuff, because that's essential for you to make that jump to be a trader. It's just, the most important thing out there really is market, is trader mindset. And that's everything. That's your philosophy coming in. That's a lot of good stuff. And all that's covered in the books. And just to move forward, hey, the books are very transparent. There's actually trading plans in there you can back test. So you guys need to be upfront and transparent with yourself, absolutely. I'm also Director of Learning at IB University, also Director of Learning at tradingu.com, tradinguniversity.com. You'll be hearing a lot more about all these things next week. Before we get to the charts, I'm loving today's format because we're going right to the charts. We get the intro out of the way, and we'll be on the charts for the rest of the 45 minutes or so. I do want to sum up what we teach. I want to sum up our methodology. We focus on markets with low non-systemic risk and look to trade at those times when the day-to-day news flow is aligned with the primary or secondary patterns. In other words, we're teaching you how to be trend traders. Now, that doesn't mean we're not day traders. You know, there's always a trend setting up somewhere. We actually did a pretty good job of picking the top in the Aussie by showing the pattern that was really close to the top there. So that doesn't mean that we can't get down and dirty on those lower time frames. For the most part, though, you need to learn how to trade from that perspective of trading with the day-to-day news flow, particularly when it's aligned with those higher time frame patterns. Now, there's times you'll go against that because that day-to-day news flow is going to shift. It's going to flip around. So no doubt about it that we can teach you how to day trade too. But before you get to that, ideally you need to learn when's the appropriate time to swing trade. Again, when you view the markets from the perspective of pattern, everything makes a lot more sense. And that being said, let's go to the charts. GY asked me about the Aussie. The Aussie is going to be the first chart we're going to look at. Okay, is everyone seeing the chart here? Australian US dollar. First, let's jump out to a daily chart so you can see it in perspective. Now you can see I've marked the patterns on here. The primary pattern's up, secondary pattern down, day up, micro pattern down. So this is what we describe as a balanced market. It's balanced because you have two up, two down, secondary micro down, primary day-to-day up. So in a balanced market, I don't have much of an opinion. I'll trade either way. I'll definitely trade either way in a market like that. That's why I posted. Here, let me go intraday so you can pick up a little more detail on that. And there it is. That's the 4-hour chart, and essentially you can see that day-to-day is up, primary down. Micro pattern's down. You're getting in a micro sell zone there. We'll have to keep an eye on that. And this is why, here I'll give you a link to my Seeking Alpha blog. And this is why last night on the blog I said, I had some somewhat negative things to say overall, but I said I'm not bearish here. I'll still trade this market from either side, from either way. And you see now why I would say that from either way, because it's all balanced up. When I see intraday, there's still good trades coming off. You can still pick off good trades intraday. Although I'll be honest, I probably wouldn't be focusing on this market as much because it is balanced. The primary, let me see if you can get them all in here. There it is. The primary's up, secondary's down, day-to-day's up, but the micro's down. So that's a balanced market. That's a market that you want to trade from both sides. Here, let me just pull up my blog, and I'll give that to you. That way you can see the articles as they come out. So there's your Aussie, and GY said has come to 103.06 the second time today. What do I think? Here, let me go intraday so I can see that. Oh yeah, GY, I'd be all over. If you get a double top here underneath that purple line, that would be it would be a counter trend sell signal, and it's in line with the day-to-day news flow. The day-to-day news flow arguably still up. arguably still up with counter trade, a counter trade setup and signal south. Of course, the setup would be the double tap. You'd still need to be patient and wait for the signal itself. So I'm with you on that, GY. If you get a double tap, right there, you're looking at it, whatever level that is. So cool. That's the Aussie. It's balanced up. We're just going to take them, for the most part, in alphabetical order. Alphabetical order on an E signal anyway. And here, let me give you that post to the blog here. If you guys can access this, hopefully. And you can, there's the blog where we, I write the articles as far as forecasting and all that good stuff. And that way you could go back and see the history. And that's going to give you a good heads up, have a good read on the method overall that I'm demonstrating to you. So that's your Aussie. You're in a balanced market. A balanced market, you're either not going to trade anything or you're going to trade both ways. You don't really have much of an opinion. Here's a cool market, Aussie CAD, coming up next. Here's the Aussie CAD. The Aussie CAD, as you can see, you're in that's another balanced market. Here's what's unique about the Aussie CAD, though. Arguably, okay, we can see clearly your pattern, your secondary's down, your primary's up, your day-to-day's up. It'd have to go intraday to see the micro. Oh, your micro's still down. The micro's still down. But very shallow retracement here. Generally, I'd look for a double bottom there. It didn't even give me the double bottom. Came in and out of there. So Aussie CAD a pretty tough market. But the primary, your micro pattern would still be down. This is you want to mark these two. I tell you what, I've never marked them all. I just kind of fly through these. I'm just kind of winging it. I do all this in my head. But I tell you what, it really relaxes me to have these markers on here. It's just a little bit more organized. So the micro pattern's down. So Aussie CAD, it's a tough market. The secondary, it's a tough market because you had a very shallow retracement, but it's still balanced. So secondary down, micro down. So 2 up, 2 down, basically. So in a 2 up, 2 down market, you're going to trade either side. And you'll look, let me see what that looks about a 50% retracement, but it didn't give me the double bottom. It's a tough market, man. It just takes off like that. So Aussie CAD, if you look at it on the weekly too, you can see that this is one big bull market right here. The obvious advantage here is that the Australians have much more favorable demographics than the Canadians. The Canadians have the water though, but the Australians have the young people. Now, I'm not going to get into the explanation of how we set the patterns. That's very definitely proprietary information. Simple as it is, though. Simple but proprietary. So Aussie CAD, this is a market we taught in one of our first courses. We talked about this market. We've been highlighting this market for years. I'll go out to the weekly because it has such hugely favorable demographics for the Australian. And you can see it that, that's a market that, buying a dip in there tends to be a pretty positive thing. On the other hand, that secondary is a son of a gun, right? And, there's a possibility you could have broken through it earlier, but you didn't. Now, guess what? You're getting into dog days of summer. You don't want to be banging your head on a secondary. You don't want to be, looking at a potential shift, a break out of the secondary when you're in the dog days. So you just have to be patient. This is a market where you can still trade it from both sides. Although that micro is it's curling up. Direction is up too here. So direction is up, but you're knocking on that micro. So Aussie CAD, tough market as always. Hugely favorable demographics there. Yeah, Blakey, the micro is going to be intraday to several days. So here you get a good look at the micro pattern here on the 60-minute, intraday to several days. A super micro would be maybe session only, like the European session or the U.S. session. So the micro's that's going to be intraday to several days. So your micro's down. It's your day-to-day, however, your day-to-day pattern, which you can see, your short-term and long-term day-to-day pattern still bullish. Your day-to-day pattern is the one that's reflective of the day-to-day news flow in that market. So Aussie CAD, yeah, it's balanced, but very shallow retracement. No surprise, you got this overwhelmingly favorable demographics there. I'm telling you, Aussie, the world loves Aussie. Institutions love Aussie. Sovereign funds love the Aussie. Aussie yen coming up next. Well, they don't love it so much against the yen, though. Here's a market there. I think it's, well, you can see you're clearly balanced. Look, this is a daily chart, so your secondary pattern's down. Your long-term primary pattern's up. Your secondary's down. By the way, I distinguish long-term because for every pattern, markets are fractal in nature. So for even each pattern, you can break that down. We try to just keep it simple, though. The long-term pattern's up. The reason I don't designate the short-term, my short-term primary is because it's just flat. This is a fascinating market for me because it's just been flat for so long. When I see a market in a sideways range and one of them, the Aussie, happens to have overwhelmingly positive demographics compared to the other one, I keep an eye on that because long-term, I want to be a buyer of dips in that market. Not a whole lot of risk if you can buy a dip and you don't even have to trade big. It's beautiful about currencies. You have the minis, you have the micros. I mean, you can pick up a couple of thousand if that's all you want and put them in your back pocket and put a stop way down here and hold them for an investment. And you get a yield on it too. So, Aussie yen, it's a fascinating market, but it's all up, it's all sideways. It's all flat. And when you look at the patterns here, you can see you're definitely, that's actually this is a buy opportunity because we'll take that long-term day-to-day up. That would be a counter trend trade on the purple line. Oh, yeah, that's a nice head and shoulder on the purple line. So that head and shoulder on the purple line, that may be something we'd look at intraday as a trade, but that time of day, that's the London Open. I'm sleeping then. I'm snoozing. So here is your 240 Aussie yen. You're balanced again, and all these markets are balanced up. They're balanced up going into August. So you're balanced up going into the dog days, and that's about right. So that actually may be one of these rare times where, well, I should say rare, but that's a time for counter trending tactics. A lot of times I beat up on counter trending tactics with good reason because, in the world we live in, you have to have a trend. You have to have both. You can't just rely on counter trend trading. And when I say the world we live in, the weekly chart, the patterns on the weekly and daily charts, they're absolutely reflective of the business cycle out there. More important, what's the underlying structure beneath even the business cycle? And that's the big wide world we live in. It's a confusing world we live in right now. It's a whole lot different than it was 5 years, certainly 10 years ago. You have climate change. Do you think climate change is going to make markets more volatile or less volatile? I would say definitely more volatile. U.S. grain prices are at all-time highs. World grain prices are at all-time highs. So you're in a changing world. The climate's changing. You have absolutely a different economic dynamic with the quantitative easing than we've ever had. You have negative interest rates now, right? The world has negative interest rates. So that, you're not counter trending methods, mean reversing methods, they're not going to work anymore. How low can Aussie yen go? Or probably not Aussie, but how low can pound yen go? Well, we'll look at the chart and see, but that's not a market that you want to be trading a counter trend method in. So, that being said, if you are in a counter trending environment currently, because you can see your patterns are balanced, but that's why it's so important to understand what type of environment you're in, because then you know exactly what tools to use. GY hold for investment? Could we do that on a currency? Oh yeah. I think GY's probably kidding around, but yeah, when you have a yield on it too. Yeah, put a couple. When you get a big dip in Aussie yen, buy them. right? You can actually put a currency account in your IRA too, and that's not a bad idea at all. You can do that, put it in the IRA, and then when these things dip, grab a couple down there, put them in there. Okay, the trend is your friend. A boy wants to know the trend. Direction in this market is currently up on the 4-hour. You can see this is a tricky market because you have resistance right here and support right there. So, no, there's nothing to do here. When you look at it on a daily chart, you got to think, hey, if you can buy a dip, that'd be great. But this is another balanced market. I better speed it up or I'll never get through all these markets. So that was Aussie yen. You're balanced up here, but you could tell that it looks like you're changing direction on that daily too. I would look, if you get a double bottom now, see it on the 4-hour. If it comes back down and puts a nice double bottom in, that would be attractive for me. That'd be an attractive buy setup, counter trend buy setup. So you had the double top on the secondary, that kind of put the kibosh on that rally. And now technically that's a double bottom on a purple line. So that would definitely be something we'd be interested in intraday. And there it is. I didn't quite get there. But there you can see the double bottom. Here's the first bottom. There's the second bottom. And that may be a nice retracement there. Here, let me take a look at how that did retrace down. And that would be, there you go. And that's a 15-minute where it got, see, that's our buy zone basically. You get into the buy zone. Boy, it didn't spend long enough. You look for the V bottom on the green line. Double bottom on the purple, V on the green. Let me see on the 3-minute how it looks. Boy, look at how it came rocketing out of there on the 3. There, you got to get in when you get in, right? So that would have been a buy zone there in the S&P 500. And by the way, this is a counter-trending market. Oops, let me get rid of that. This is counter-trend too because the primary is up, the day-to-day is up, the secondary pattern's down, and the micro is down. I didn't designate the micro. The micro is what most people key off of, and that's why most people lose money. The micro is up and down like a fiddler's elbow. A lot of people confuse the micro with the day-to-day. They think the micro is a reflection of day-to-day news flow. That's not true. The day-to-day pattern is. So your day-to-day is kind of flat, but your long-term day-to-day is still bullish. Short-term day-to-day flat. So you're flat heading into the dog days. When you're in a balanced market, what we call that, look like you actually had a pattern within the pattern here. Haven't looked at gold in a couple of days. There you go. You can see that's our pattern within a pattern. Look at it. The overall pattern held. Now that short-term day-to-day pattern held. So it held the pattern. That's what you look for. Two patterns aligned like that, and it came shooting out of there. So I'm not sure why it did it, but it shouldn't surprise us. Oh, I showed you two. I'm sure you had a third one there too. And that's what you look for as a trader, your third pattern. When you get that third one aligned, it's right here it was. Yeah, there's the third one. I showed you that. There's your third one. You're in the zone, so pow. So when you get 3 patterns aligned, you sure don't want to get in the way of that. So that's gold. Primary pattern down. Arguably, your day-to-day is now, well, it's flat. Gold is still flat here. But you did have 3 patterns aligned at that apex before you blasted out of there. Euro next. Euro, U.S. dollar. Here, all the euro pairs are extremely boring. What can you say? We don't even need to spend time on them. It's obviously primary down, secondary down, day-to-day down. And, those other, the Aussie pairs, the reason they're balanced, the reason they're stable is because the Aussie is very definitely a market with low non-systemic risk. Here, let me go back to this PowerPoint. So you can read that again. We focus on markets with low non-systemic risk and look to trade at those times where the day-to-day news flow is aligned with primary or secondary patterns. That's always worth repeating. What's the euro? You have extreme systemic risk and extreme non-systemic risk. So, the euro, what can you say? I'm always asking myself, why haven't I made millions of dollars on this euro this year alone? But on the other hand, it's a tricky market to trade low or down because you have that extreme you have both systemic and non-systemic risk, so it's kind of tough holding a position. That's one where you have to view the euro as an investment. Short the euro is like an investment, essentially. You have to approach it that way. You have to trade small. You have to be hands off, and don't even look at the trade. Don't even look at it when you're in it. Boyke Desar, he's asking about. I hadn't had that on the list. Let's take a look at it. South African rand. For some reason, I'm not picking it up. I'd have to change providers real quick. That's nothing but hitting a couple of buttons. But I better stay on point here. If we have time afterwards, we can come back to the ZAR. Euro yen. Euro yen is another one where, this is why I beat up on counter trend methods and people teaching essentially only teaching counter trend methods because you get killed. This used to be a pretty good trading vehicle. I used to like it because it just had a tight spread. Remember in the old days, like everything had wide spreads, but euro yen had a somewhat tight spread. Now, luckily, everything is tight. That's great. But euro yen used to be a pretty good trading vehicle. Now it's no longer a good trading vehicle. It's kind of like watching two skinny guys arm wrestling. Well, it's going to get to that way. There's room on the downside still as the euro weakens against the yen, but over time, this is going to continue to become, in my estimation, a poorer and poorer trading vehicle because there's going to be no volatility in it. Look at how tiny the ranges are compared to here. Look at these massive ranges back here in the old days and then in here too. But now the ranges are getting smaller and smaller, and eventually it is. It's going to be like watching two skinny guys arm wrestle. It's going nowhere. It's a market with extreme non-systemic risk and systemic risk. So it's just, it can go and go and go. I mean, there's nothing to say that this guy can't go to 90. Likewise, there's nothing to say you can't have a short covering uptick that, blows you away. So it's just really not a good trading vehicle from my perspective. And, it used to be a great trading vehicle, but to me, it highlights the importance of being a trend trader. It highlights the importance of using a method that's going to take advantage of the fractal nature of markets. Meaning, when you get in a trend, you're going to stay in that trend. So you need to just stay in the trend. Yeah, that's right, Philip J. Because the most methods taught out there are very definitely counter trend methods. Philip J. saying some traders seem to hate trend days and make a killing when the markets range 80% of the time. Trend days, I love trend days because your positions do well. There's nothing wrong with a slow rolling trend because then you could do well day trading too. The majority of methods being taught, I haven't really taken a good hard look at them, but just a couple of years ago, easily the majority of methods out there, the majority of books out there were about counter trend methods. And that works great in a balanced market. That works great in a stable economic environment. But, the world is anything but stable. Again, you just look at the weather patterns the way they are. Look at this phenomenon of zero interest rates. It's not going away, people. You can't, the world turns. You can't go back. So, Philip J., to me, you absolutely have to have a trend trading method in your tool belt. And I love what we do, and that's why I love teaching this too. I feel great about it because I see it every day how it works, and we identify whether we're in a trending or a counter trending market ahead of time. If you try to pick a bottom in this market, euro yen, you would have gone broke a long time ago. Well, there's a time for range trading. There's a time for counter trading methods, and you're probably getting close to it now, getting into the dog days. But don't counter trend in a balanced market, such as we were showing you, like go back to Aussie yen. This is a balanced market. This is a fine market to counter trend trade because it's balanced up, meaning, you could probably sell it up here and buy it down there. Not this market, though. That's a dog, Euro yen. Euro Aussie. This is a market I'm killing myself. I can't believe what was I doing? Why didn't I make a killing in June and July on this? I'm in the technology business now. I'm no longer a trader. I'm in the video delivery and management. It's no fun. But yeah, this is just a great trade. My God, look at that trade here coming down. But right now, though, here's another one where, there's no bottom in sight here. A weekly chart. Look at this. What's going to change to get people out of that trade? I wouldn't come out of it, and that's the world you're in. Oh, gee, why I trade all the time. I trade all the time. I have to be, because I still have a Series 3, I have to be very careful what I say. Literally, what I'm saying, this would be considered, anything I say right now is essentially held out to the public. Not necessarily what's on the chart, but what I say. So I have to be very careful when I'm talking with the public as far as a trade. Basically, if I'm going to tell you how I do as a trader, I need to be a registered CTA, and I need to have everything have been audited by NFA approved certified public accountant. Well, Philip J is asking about the E-mini. Yes and no. I'll show you a great trade in the E-mini if you can see it. A great setup. Anyway, that's an area on the chart I look for resistance, right? Now I'll show you exactly why I look for resistance there. Well, close enough. But you see the resistance level on the chart. So to me, that's a second pattern there. So when I go down to the 3-minute, this is a great trade. But basically, I'm pointing out for our methodology, here's a day trade, trend day trade. You're short there, and you just stay in that guy all the way on down. See if you'd come out there. Well, you may come out a half of it there and then the other half there. But to me, I'm not, and that's a nice trade. I looked at one point, that trade was up over 10 points in the S&P. That's $500 on a one lot. So to me, that's a good trend trade. But the E-mini day traders that make their daily bread, as far as making markets, that's not, that's a tough row to hoe too. That's an extremely stressful job. The market makers are all counter trend traders too. And you better be negotiating commissions in penny, not dollars. You're doing that for a living. But back on point here, the Euro Aussie, as in any Euro pair, it's just a dog, and there's no bottom in sight. There's no reason to think that could bottom, other than occasionally you'll get an occasional hiccup from JPY here. Dollar yen, essentially. If whatever dollar yen does, they're all going to tend to follow that, because that's kind of your alpha yen pair there. Fuji Kimbo is asking about Euro Chief. What's up with that? For some reason, obviously that can't be the market, right? I'd have to switch carriers to see why it's doing that. Not sure why the Euro Chief is not coming in there, unless it can't possibly be that, right? Obviously, it's not doing that, right? Or is it? Who knows? Chart is correct. You're kidding me. No, it can't be. Well, there you go. That's what I feel about that market. I wouldn't trade that market. Well, that's your ultimate mean reversion market, right? Well, they just locked that thing, and so the Swissies aren't messing around, are they? They're just going to make the market themselves there. So But let's get back on track. The euro pound. Here's another market I asked myself, why in the world didn't I make a killing on this one? Because I remember focusing on this market years ago, thinking, you gotta be selling rallies in this one. And here's another one where I didn't even identify. That's the weekly chart. But you go down to the daily, I didn't even have to identify it. That's your primaries down. Here's your secondaries down. Your day-to-day, definitely down. So here's another one, euro pound. Anything with the euro in it is just going to be a dog. Just wait for a retracement. Just wait for a 50% retracement and wait for a little intraday price pattern at a 50% retracement level. Somewhere between the 50 and the 70, and wait for a little head and shoulder, a double top, and just that would be an attractive setup for us because it's in line. Here's your day-to-day I just spelled out. So if you can get that day-to-day somewhere north of 79 and a quarter or so, look for a pattern there. But again, euro, any currency with the euro in it, it's just going to be a dog. Pound dollar, we take a look at. Pound dollar, this is a pretty good summertime trading vehicle because you can see you're all balanced up. I love a market that's balanced up. Your long-term, your primary's up still. The day-to-day is still holding up too. Yet you can see very definitely your short-term primary's down, secondary down. So yeah, you're really balanced. This is a sideways market. You pull back to weekly, and you can see you're really sideways. Now this is a good summertime counter trading market to be in. If you still have counter trading tactics that you follow, and they're still viable, in a sideways market, they're definitely viable. They're not going to work in those yen pairs or the euro pairs either. But no, the pound is still a decent trading vehicle. I think it has a lot to do with the Brits were quicker than anyone else to follow the U.S.'s lead with the QE. So the Brits followed the U.S. lead on the QE, and that ended up being somewhat supportive of their currency. You can see it's not getting killed like the euro is. It's actually holding those lows. So this is a market where it's still a little whippy for me though intraday, but it's a market that's balanced. So it could be a decent swing trading market. You look for a double bottom coming up just above 154. That may be something to look for. Pound yen, boy, anything with the yen in it, it's just too tough to trade in my estimation. Here's another one, primary down, secondary down, day-to-day down. Let me see where you're at now. Well, you're on top of a short-term zone there. I guess we could call that. I'm not even sure what it would be. Somewhere between a day-to-day and a month. Well, short-term day-to-day up, perhaps. Long-term day-to-day down. But you may hold that level there. But it's you may get a bounce off of that level, but it's it's a yen pair, and that's about that. The key to surviving, well, the key to being a good trader is first you need to learn how to survive, and the key to that is knowing which market to be in as far as trade selection. And I'm sorry, the pound yen is not what it used to be. When I was a commodity trader for 100 years, but when I first started looking at Forex, I loved the pound yen because it was volatile. Why was it volatile? Because it had a yield to it, the dragon, right? This market doesn't have a yield to it, so it's absolutely going to get whipped on every time you see systemic risk coming in the market. It's going to get whipped, but it's all non-systemic risk too, because something happens in Japan or Britain, you're going to get whipped. There's no yield there. There's just no institutional interest at all in it. So, why even go there? This is a market that'll probably eclipse these lows, those all-time lows. If it goes below 120, you'll probably see 110. I mean, it's that simple. It probably doesn't have a lot of institutional interest in it either. You're a team. Let me see. Let me see if I have it here, Kim. Nah, it doesn't look like I'm getting it. So pound yen, not what it used to be. Any one of these markets where we see all the patterns are down, there's nothing you can do but wait for a rally to get short. Trend traders' dreams, though. There's just they're a victim of interest rates. We're seeing negative rates, and those pairs already have negative rates, so there's no interest in them. So you got, in my estimation, that's why. Well, in my estimation, you stick with markets with low non-systemic risk. The pound yen is definitely not a candidate for that. And now we'll get into some interesting markets. CAD, dollar CAD. This is an exciting one because the primary pattern is up. So your short-term primary pattern is up. Your secondary pattern is up too. So what's our method? We focus on markets with low non-systemic risk and look at it trade at times when the day-to-day news flow is aligned with the primary or secondary pattern. So currently the day-to-day is down, but what happens if that day-to-day shifts? If we get into that zone and we get a shift, that's going to be a good one. This is a great market for low non-systemic risk because essentially because of the North American Fair Trade Agreement or whatever, NAFTA. The U.S. and Canadian border, it's basically one country. There's not a whole lot of difference, And given that Canada, almost all the people in Canada are within 100 miles of the U.S. border, it's almost like one area up there. What that means is you have very low non-systemic risk in this market, right? Because they're so aligned and they're so close. So this, I think, is a good market to trade. Dollar CAD, currently you're balanced up pretty good. Your day-to-day is down, but your day-to-day and I stand corrected. Let me go intraday here. Well, that would be your micros up. So technically you had three going up. You had the primary up, primary, secondary, micro all up. Just the day-to-day is down. So this is another one where I'm watching it closely. I think if you pull back towards that purple line, if you pull back into the zone again, ideally you get a double bottom where it bottomed last week. However, I would keep an eye out for a potential buy setup somewhere in here too. So to me, the CAD is ideal. I mean, it really looks like a potentially ideal trade. My only concern is it's August. It's dog days. On the other hand, I like that. I like being long a dollar pair because you have the U.S. elections come up. Believe me, they're going to be slinging mud. It's going to be ugly. And it's still fresh in every trader's mind what happened last August when we all getting ready to go away on vacation or we're on vacation. And, you had the problems with the Congress and the Senate and the whole tax business. And it was just a debacle. It's so embarrassing. The markets hate that. So you'll definitely get some of that again. What you want to do when that happens, you want to be long the dollar. Here's last August. Here's late July. Here's last August. Boom. And then the problems in September again. So when you have problems in the U.S. stock market and you have, any time that, you have to make a tax decision in Washington, D.C., you better be long the dollar because they're going to screw it up initially. So to me, this is my favorite market right now. There's the potentially favorite trade here, buying a dip in dollar CAD. You have the primary up, secondary pattern up. So you come down here and you bottom in that zone, you want to watch that. Okay, hey, Michael wants to look at the Kiwi. I didn't mark the Kiwi. I tell you what, it looks like it's just off the top of my head. It looks balanced here. You see the primary is definitely up. This is an interesting one because your long-term primary is up. Arguably, though, you have a pattern of lower highs here and going back for more than 10 months, right? So, July to July, you're softening up here. You're definitely softening up. But you know what? The bottom line is the primary is up, though. So you're pretty well balanced up in the Kiwi. There's your zone. There's your primary buy zone. You see you had that big double bottom there you got in the zone. Yeah, it's pretty well balanced up here in the Kiwi on the 4-hour. Kiwis, it's like anything else. It's like all the heavily traded balanced market. Kiwi's a good market, somewhat low non-systemic risk because you have that good decent yield. To me, why trade Kiwi when you can trade Aussie, right? Well, unless unless you're familiar, more intimate with it, and you have some experience how it moves, of course, that'd be different. But Kiwi would be a balanced market here. Let's look at the Chief, and we'll get close to wrapping it up here, the Swissy. This is a nice one, but I'd like to buy a dip. Also, my long-term primary, which will be my grand pattern, is still bearish. You have some pretty good resistance up ahead here. Wouldn't mind a dip, though. Wouldn't mind, a pullback towards 95. So the cheap dollar Swiss, that is. The dollar Swiss is not looking bad. You're coming up on pretty healthy resistance up around 102. But you're still, you're in the 98 handle now, so there's room up there. Wouldn't mind a dip, though. It's probably extended itself. Look like it extended itself pretty good here, and then your blue stops one more time. So you may be in for a correction here. Let me see what that last correction retraced to. Yeah, look at that nice double bottom on my purple line. There's the double bottom on the purple line. And see there, it would have been on the 4-hour too. So double bottom on a purple line. So in other words, the market's giving us, it's telling us it likes that 50% retracement. So in other words, we would look for another 50% retracement potentially somewhere right there, just above 97. So I tell you, the Chief doesn't look half bad, but you'd want to buy a dip. Looks pretty good on a dip because you have primary and secondary up. So, boy, getting long the dollar on a dip heading into political season doesn't look like a bad play at all. And speaking of dollar yen, which is, this market it just bedevils so many traders and analysts because I don't know what it is, right? There's no correlation to it. I love markets that are correlated, such as the stock market, the Aussie, even the euro. Tags along. Boy, dollar yen has just got a life of its own, though. Really does. Mike gave me that Fibonacci yesterday, though. What was that? The 76.4 was it? Yeah, there you go. 76.4 here. Let me show that to you. Yeah, I looked that up, and sure enough, that's a Fibonacci number. Here's what's fascinating about this. Oops, I got the wrong one on there. Excuse me here. Let me. Okay, my retracement set to 6.4. That Fibonacci number. Look at that near perfect where it bottomed in June, right on the 764. Okay, remember that. Now we go take this move, starting here. Before we went here to there. Now we're going here to here, and look at where it bottomed 2 days ago. 76.4, 77.92, and that low was like right on it, hair above it. So this market loves 76.4. Now we can drop down. Let's drop down to a low intraday. And look at this retracement. Guess what? Just a hair above 76.4. So the yen loves 76.4. Now we can keep going down to a 15-minute. And if we can get another one, then you'd have 3, and then you'd be all over that. So 76.4, 78.11. So if you wanna, let's keep an eye on that, because that could potentially be something. That would be the third pattern. Here's the second pattern. So let's see if you get that third. Here's the first one, second one, third one. So let's see if you get that third one, if it comes down there and tags that. So there's the potential setup in dollar yen. Potential of somewhat lower risk too, trade on that. You know, if you can pick it up in here with a stop just below, put the stop at 04 or so. That may be something to look at too. So that would be dollar yen. Dollar yen loves 76.4% retracement. That's the retracement du jour there. Boyke, the dollar Swiss. Your primary pattern was up. Primary's up, secondary's up. Your grand pattern technically is still down, and that's the grand pattern resistance. But this guy you just keep buying dips in it. Oh yeah, no doubt. You see that Philip J saying, yeah, the currencies are a big support and resistance market, big retracement market. You see that. We see it over and over again. That's fractal geometry. When you get the similar retracements over and over again, that's a growth pattern. And the growth pattern, markets, like anything that grows, there's definitely a pattern to it. So yeah, that'll do it. That'll wrap it up for us. That was JPY we're on. So we'll have to see what happens there. But yen pairs, honestly, they're dogs. You're not going to. I think so many traders lose so much money is because they're always looking to pick bottoms. It's just human nature to think you're going to pick a bottom and ride it all the way up. And it just doesn't work. Currencies are a trending market. Yeah, they love retracements. They respect them. Very definitely respect support and resistance, but they're also a big-time trending market. And you have to learn to be a trend trader. You have to learn that, you use these markets for investment purposes too. But to me, the best potential setup here was dollar CAD. If you get a dip in dollar CAD here, that'll be worth watching. Especially going into August, especially you got the political season. Believe me, they're going to be slinging mud. And it gets ugly. American politics is an embarrassment right now. And you can know that. That's not going to change. It's like, the neighbors next door where he drinks too much and she swears and throws things and stuff. Those people aren't going to change, right? Their behavior is not going to change overnight. They're going to be drinking and throwing things at each other all until they move away, right? And U.S. politics are just a spectacle. That's not going to change. So with all the bad things out there, it's only going to get magnified going forward. So to me, pulling back and looking at dollar yen, it's a market with low non-systemic risk because the economies are tied so tightly, so you don't have to worry about big moves against you, big adverse move. So low non-systemic risk. You have a primary pattern up, a secondary pattern up. You can't ask for much more. So I still like dollar CAD, and my upside target would be last year's high all the way up here. Common sense investing, right? Do you really think that they're going to ease up on pointing out, how the the low points or the inadequacies of the Democratic administration, do you really think the Democrats are going to stop, throwing rocks at the Republican Senate and reminders of how the last administration wasn't up to snuff? So, to me, it's just, I'm not all that bearish because I think any dip you get is always worth buying it. I think you buy the dip in any asset class market, but you could be in for a big dip here in stocks and potentially Aussie too. And the way to, the other side of that is be long the dollar. So that's where I'd be looking at. No, Boyke, I have enough politics in my life right now. Just working with these education companies. It's a labor of love, though. Well, that should do it for us. Thanks a lot. We're going to do this once a week now. We'll do this every Wednesday. The timing is great for me too, noon, because pretty much everything's dried up by then. So we do this once a week or so, and I guarantee you over the time. Like again, I'm a Series 3 individual. I can't use that word guarantee, but the one thing I can guarantee you is we're going to see some neat things evolving as we do this on a regular basis. You'll find that wow, it can be that simple. It definitely can be that simple. So that'll do it. Oh yeah, I think after the election ends, though, you're in for some really good stuff. Yeah, absolutely, boy. Keep it simple, stupid, right? But we'll do that, and we'll see some neat things, and you guys will hopefully put some of these pairs in your back, some of those Aussie pairs, get them in your back pocket on these big dips, and just buy a couple of them. Buy a couple micros if you have to. Forget about them. Don't even look at the market. Just buy them, put them in there, and we'll see once if you get regime change in the U.S., you could see some good, pretty good upside. But you're not going to see. I don't think you're going to see a breakout in asset class markets on the upside till the yen turns around, until the Japanese investment class, which is extremely powerful. The reason the yen keeps strengthening is because they continue to bring money home. They've been bringing money home since '07. Stocks topped. They're not going to start redeploying until the Japanese investment class, which is extremely powerful, until they start redistributing money, until they start investing outside of Japan, which they haven't been. You're not going to get these asset class markets going, and that's what that's why all these secondary patterns in the asset class markets, such as the stock market, are still down. They held because the yen strengthened here. You couldn't break that guy out with a strong yen. You need a weak yen to break that guy out, and we'll be there when it happens. So, hey, thank you so much, and we'll catch up with everybody next time. Appreciate it.